You just made some serious gains trading on Newton. Maybe you cashed out a few lucky crypto bets, or maybe you've been a disciplined, long-term investor building your portfolio slowly. Either way, now you're faced with a question that can feel a lot scarier than a volatile market. How do I deal with the tax man? Relax. It's not as bad as you think. In fact, if you approach it correctly, organizing your Newton trades for tax season can be surprisingly straightforward. This isn't just about avoiding an audit, it's about making sure you're only paying what you legally owe and nothing more. And let's be honest, who doesn't want to keep more of their hard-earned money? Before we dive into the nitty-gritty, let's get a couple of things straight. First, I am not a tax professional. The information in this video is for educational purposes only. You should always consult with a qualified accountant or tax advisor for personalized advice. Second, we're going to focus on the Canadian tax context, as Newton is a Canadian-based exchange. If you're watching from another country, the principles might be similar, but the specific rules and forms will be different. So, let's start with the big picture. In Canada, the Canada Revenue Agency, or CRA, views cryptocurrency as a commodity. This means that when you sell, trade, or otherwise dispose of your crypto, you're either generating a capital gain or a capital loss. And yes, disposing of your crypto includes trading one crypto for another, using it to buy goods or services, or even gifting it in certain circumstances. This is the first and most common mistake people make. They think that only converting their crypto back to Canadian dollars is a taxable event. Wrong. Every single time you trade Bitcoin for Ethereum, or use your Solana to buy a new computer, you're creating a taxable event. Now, a capital gain is when the proceeds from your sale or disposition are more than the adjusted cost base of that crypto. The capital loss is the opposite, when the proceeds are less than the adjusted cost base. The adjusted cost base, or ACB, is a crucial concept. It's essentially the average cost of all the units of a particular cryptocurrency that you own. We'll get into how to calculate that in a moment. The good news is that you only have to pay tax on 50% of your capital gains. Capital losses can be used to offset your capital gains, which is a key strategy for reducing your tax bill. In fact, if your capital losses in a given year exceed your capital gains, you can carry those losses back to offset gains in the previous 3 years or carry them forward indefinitely to offset future gains. This is why meticulous record keeping is so important. Alright, with that foundation laid, let's get down to the practical steps of organizing your Newton trades. Step 1. Get all your data. Newton makes this relatively easy. You can download a complete transaction history from their platform. Log into your Newton account, navigate to the Activity or History section, and look for an option to export your data. You'll want to export all of your transactions for the entire tax year you're working on. This download will typically be a CSV file, which you can open in a spreadsheet program like Excel or Google Sheets. Step 2. Understand the data you have. Your downloaded CSV file will contain a wealth of information. The key columns you'll want to pay attention to are: transaction date, the exact date and time of the transaction. Transaction type, this will tell you if it was a buy, sell, trade, deposit, or withdrawal. Currency in, the crypto or fiat currency you received. Amount in, the quantity of the currency you received. Currency out, the crypto or fiat currency you spent. Amount out, the quantity of the currency you spent. Fees, any fees charged by Newton for the transaction. Step 3. Calculate your adjusted cost base, ACB. This is arguably the most challenging part of the process, but with a good spreadsheet, it's manageable. The ACB is the average cost of a particular crypto. You need to calculate a separate ACB for each type of crypto you hold: Bitcoin, Ethereum, Litecoin, etc. Here's a simplified example of how to calculate the ACB. Let's say you bought 1 BTC for $50,000 on January 1st. Your ACB for Bitcoin is now $50,000. On February 1st, you bought another 1 BTC for $60,000. Now you have a total of 2 BTC, and the total cost is $50,000 plus $60,000 equals $110,000. Your new ACB is $110,000 / 2 BTC equals $55,000 per BTC. On March 1st, you sell 0.5 BTC. The cost of those 0.5 BTC for tax purposes is 0.5 * $55,000 equals $27,500. You need to do this for every single transaction, adding the cost of each purchase to the total cost and the number of units to the total units to get a new average. This can get complicated quickly, especially with multiple trades. This is where crypto tax software can be a lifesaver. Step 4. Use crypto tax software. While you can absolutely do this manually with a spreadsheet, it's time-consuming and prone to human error, especially if you have a lot of trades. Crypto tax software is designed to automate this process. Platforms like Coinly, CoinTracker, and Accounting can connect directly to your Newton account via an API or by uploading your transaction CSV file. They will automatically calculate your ACB, track capital gains and losses for every transaction, and even generate the necessary tax forms for your country, such as the T5008 or a capital gains summary for the CRA. Here's how a typical crypto tax software workflow would look. Create an account with the software. Add Newton as an exchange. You'll either connect via API, if Newton supports it, or upload the CSV file you downloaded earlier. The software will import and analyze your transaction history. It will automatically calculate the ACB for each of your cryptocurrencies. It will then identify every taxable event, every sell, trade, or disposition, and calculate the capital gain or loss for each event. You can review the results and generate a tax report. This report will provide a summary of your total capital gains and losses, which you can use to fill out your tax forms. Step 5. Fill out your tax forms. For Canadians, the primary form you'll be concerned with is Schedule 3, Capital Gains, or Losses, in the current year, which is part of your T1 income tax and benefit return. On Schedule 3, you'll report your total capital gains and losses from your crypto transactions. You'll take the total capital gains calculated by your spreadsheet or tax software and enter it in the appropriate section. You'll also enter your total capital losses. The form will then calculate your net capital gain or loss and apply the 50% inclusion rate. This amount will then be added to your total income for the year. A common question is whether you need to fill out a T5008 slip. Newton, as a Canadian exchange, may issue T5008 slips to users. However, these slips can sometimes be inaccurate, especially when dealing with complex crypto-to-crypto trades. The CRA has stated that if you have more accurate information, you should use that to report your gains and losses. This is where your detailed spreadsheet or reliable tax software report becomes invaluable. You are ultimately responsible for ensuring the accuracy of your tax return, not your exchange. So, use the T5008 as a guide, but rely on your own meticulous records. With that said, thanks for watching and until next time.